Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay. He's a home ownership consultant from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks a lot for having me back, Jim.
Taking a look at the Vancouver foreign buyer tax, there are reports that foreign buyers are now grabbing up Vancouver real estate again because of the tax. But are they really?
Are they really? Okay, so I think what you're commenting on is there's been a couple of news headlines out there about a surge in foreign buyers again, specifically in Richmond, I think.
Yeah.
Is what one of the articles that was out there. What your listeners need to understand was the way that the rule was brought in, the way that it impacted the market, the fact that the Chinese had changed their the way capital was coming out of the country. What you're hearing now in these reported numbers are probably the result of brand new pre-sale condominium sales that took place the previous year. In other words, these are probably sales that that took place back in 2014, 2015, 2016, and then those deals are now closing as the buildings are being completed. You have to track those numbers exactly on a per building basis, and then you have to interpret them from how long the original purchase date has gone on from. So what we do in those circumstances, we look at the closing prices, and then we compare that against what the current closing prices are. And if the closing price is lower, odds are it was purchased at an earlier stage. If the closing price is closer to what they're selling for at the end of the term, then odds are it's closer. So I think that's what you're looking at there.
Right, and of course they bought at a price that would have been lower 3 or 4 years ago than it would be now.
Well, this is one of the biggest laughs that we have when we have all these people commenting about housing, and it's just another example of the ignorance that is out there. These prices that were recorded, if they were MLS listings, they were actually recorded 2 and 3 years ago. So that skewed the numbers released by the real estate boards from 2 or 3 years ago, which is what we tried to communicate on your show before, Jim. We've tried to explain to people that the real estate boards are not releasing house prices as of today. It's a real aggregation of information that you have to separate into each of its components and then reassemble again so that you have a better understanding of what's going on. Certainly, if the concentration or the number of sales, the share of sales was increasing at a given time towards brand new construction homes, those were not resale sales properties. Those were brand new properties. When I first left organized real estate, one of the very first things that I found out was that the press, the government, CMHC, the public at large believed that the organized real estate, Korea, Real Estate Association of Greater Vancouver, TREB, Toronto, the public believed that was resale home prices, when in fact it wasn't. And because the number of new homes being counted in a monthly sales total for a real estate association varies widely over the course of a trading cycle, and varies even more widely over the course of a realty cycle, that just adds further house price illusion. And I think that's exactly what you're describing here today when these people are talking about the foreign buyer count. You have to remember, their governments still have not come clean about the breakdown between resale foreign buyer sales and new home foreign buyer sales. They have never come clean about that. The Liberals never once separated that data. Now, I believe they didn't separate it for political reasons, because a lot of their donations that were coming into the party were coming from those that were benefiting from new home construction. But you still have to ask, how long before the NDP and the Greens in their new combined format release that data to the public? Because as of today's date, the public still has never been told what the separation of foreign buyer counts is. Or as I have stated on this show, more importantly, foreign owners. What percentage of Vancouver homes are owned by non-Canadians? That is the number that really matters.
We'll have more with Ross Kay right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Ross Kay. Ross, last year at this very time, you were telling us how house prices in Vancouver were off well over 20% when no one else was saying that, or for that matter, even so, they haven't said that today. Prices in Toronto are said to be falling by 20%, but you say that's not true, and prices have yet to fall in the GTA. How can your opinion be so different from the other people who report on real estate?
Because everyone else is part of this infrastructure that believes organized real estate's myths. Everything that has taken place since the 1950s forward was to benefit the seller side of a transaction. Real estate commissions increase as the average selling price increases. That makes common sense. So all of the metrics that that have been developed over the last 50 years and that are now appearing in real estate textbooks, they're being upheld as facts. These were all metrics that were designed to benefit the seller, getting higher selling prices. They were never designed to monitor a housing market and explain to the consumer what is going on. So, yes, that last year, Vancouver's housing market had already indicated by true metrics that your housing prices were off about 26%. That still has not changed today. Everybody in Vancouver is still waiting for the consequence of that to hit. The consequence is already there. People just don't realize it. You're going to find that that has happened. The same thing within Toronto. We have heard newspapers across this country saying there was a 160,000 drop in price since April. This is just a factual inaccuracy. The difference between Toronto and Vancouver is that as Toronto is correcting, the prices haven't even started to fall yet. All you've seen is a shift of the sales mix. The sales mix has shifted, causing that huge $160,000 price drop to happen. It's got nothing to do with housing prices. What people don't understand is that in Vancouver, there is a metric that we have that's called the quality metric, and it tells us for every 100 homes that are listed for sale, how many of those homes sell at their offering while they're offered for sale. That metric is very important because it tells you the quality of home you're buying at a particular moment in time. And that is the only metric that separates Vancouver from last year from Toronto of this year. But the only people who produce that metric is my firm, and we use it for the buyers, who buyers are asking, should we be buying a house right now? Well, I can tell you this. If there are 100 houses listed for sale at $1 million each, and I know that 40 of those houses are going to sell, I know that you're overpaying for the property. Because what you're doing is, if the person who buys the 40th house means that they're buying the 40th best house that was for sale. Not the first, not the second, not the third, not the 20th, not the 30th, the 40th. So if 100 houses were for sale, 40 of them sold, 6 of them didn't, whoever bought that 40th house got the worst deal. And we're talking a huge difference in what you're getting for your dollar. If the market is out there and there are $100 million houses for sale and only 7 of them sell, then the person who was purchasing the 7th best house out of those 100 was getting a far better deal than the person in the other real estate market who was buying the 40th best house. What your listeners need to understand is the reason why we include an appraiser as part of our home buying team. They're intrinsic to our strategy. Number one is when the home buyer hires the appraiser, and the appraiser is given specific instructions how to arrive at an appraised value of the property that buyer is looking to buy, the appraiser comes up with a true value. And if that house was rated number 40, it would be a price far, far less than if it was rated 30, 20, 10, 9, or 7, or number, or if it was the very best out of those 100 homes for sale. Now, you have to supply, the home buyer has to supply the appraiser with the proper instruction, and the home buyer also has to be willing that if they can't purchase the home they're paying to get this appraisal done on, then they're not going to buy it. This goes back to the buying blind issue, where people are buying homes without knowing what they're really worth. They get what's called an opinion of value from a real estate agent. The opinion of value is so terrible that it's not even admissible in a court of law in the country of Canada. You cannot submit a realtor's opinion of value in Canada to a court of law and have a judge accept it. The only thing the judge will accept is an appraisal by an official appraiser. The appraisers actually have did themselves a real bad business decision here by continuing to represent the seller side of the transaction. And that has led to what we call robo appraisals or automated appraisals, which is what the Teranet National Bank House Price Index actually creates. And it's what all the banks use to update their loan-to-value ratios of their uninsured mortgage portfolios, which is where the risk is. Appraisers need to be working on the buyer side of the transaction, but the appraiser needs to be given specific instructions to represent the buyer when they're doing that appraisal. Without those instructions, you're losing all the power that you have. So when we're talking about these price point drops, clearly, if I was paying $1 million for the 40th best house on the street in Vancouver 1 month, and 3 months later, I was paying the same $1 million, but buying the 7th best house in the street, that means the prices really did change the 26% we're describing. It's just that nobody knows about those 93 houses that didn't sell. The exact same thing is happening in Toronto. Toronto has not slipped back on their quality score enough that there is any measurable difference in average selling price. Now, do we know that's going to happen? Yes, we know that there's going to be a drop. What I'm saying is, though, truthfully, I could not say that they've dropped right now. Now, that doesn't mean that you should be foolish enough to buy a house, but it also means Vancouver 2016 after the foreign buyer tax, Toronto 2017 after the foreign buyer tax. Two totally different markets, two totally different price trends, and even though the commentary in the media leads you to believe one thing, the truth of the matter is an appraiser would show you otherwise.
We'll have more from Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, reverse mortgages are being advertised more intensely now than last year. We've got figure skaters telling us, hey, I can do a backflip, so you should get a reverse mortgage. Are reverse mortgages a good deal, and are they a viable solution for homeowners looking to retire?
A reverse mortgage is about the very, very last thing anyone should consider putting on their property. The shills and hucksters who are out there promoting reverse mortgages, they focus on people's fears and they try to abate those fears in these ads instead of speaking from a truly realistic financial standpoint. In other words, if your financial advisor, fee-based, so they have nothing to gain or lose based on whether or not you get out a reverse mortgage, is sitting there with you when you see the documents from a reverse mortgage, you would never sign them. Because the way that the documents are written they're only written that way to abate your fears, to convince you that they're not going to take your house away from you. If you watch all the ads, you'll see the ads are focused on, you get cash out, and don't worry, we're never going to take your house from you. That's correct. What they're going to do is eat at your home equity over and over and over again over the course of that reverse mortgage. Now, we are in what's called a rising interest rate cycle. We're in the part of the interest rate cycle where mortgage interest rate over the next 40 years is probably gradually going to go up. The reverse mortgages were being sold to people up until November, Jim, of last year, based on a falling interest rate cycle. On a falling interest rate cycle, the way that the reverse mortgage interacts with your home equity, it meant that the reverse mortgage company was always secure. They were not going to put any pressure on you to liquidate the house to satisfy the mortgage. What is happening now as a reverse cycle, we are already a full percent, almost a full, 0.9%. You're already almost 1 full percentage point higher in mortgage interest rate on a 5-year term that you're able to negotiate. In November of last year, you can negotiate a 1.99% 5-year mortgage. We are now at about 2.9% for a 5-year mortgage. That's a full increase of almost a full percent. That has massive financial consequences to the reverse mortgager, the people who lend these reverse mortgages. And for the people who are out there thinking that they're safe, yes, that portion is true. You're safe. But it also means that when it comes to the end of the road, you're not going to be left with any equity at all in your house. So you may have put off the impact of needing that cash in your retirement years. But the way that these things are structured, and because we're now in a rising interest rate cycle, maybe you're 65 and you're taking one out now. Well, 75, a lot of us are going to be really healthy and having a good life. These reverse mortgages 10 years from now are going to have far, far bigger consequences to how you're able to live that life. Any of your listeners who are thinking about getting a reverse mortgage, I will tell you this. Simply, there are so many better alternatives available for you where you are going to save probably 2 to 3% per annum, compounded annually, interest on that money, that you should be just laughing these reverse mortgage guys out of your room. Now, you need to sit down and have a strategy of how to do that. I also want to make another comment about the type of person who thinks they need a reverse mortgage. If you're listening and you're one of those people right now, odds are, folks, that you need to sell. Odds are is that you need to make a different home ownership decision. That may be to move to a more affordable property. It may be to rent. It may be to move into a retirement community, or maybe to move out of the city you're in now and to a cheaper city. Those are all the type of real reality checks that you need to be going through. Now, I say that because of this. What we haven't heard about in 30 years, it's what's called a vendor take-back mortgage. And what a reverse mortgage is, to make profits for the bank, a vendor take-back mortgage is a way for a homeowner to make money on their home. We are going to see an absolute resurgence of vendor take-back mortgages because they are such a fantastic way for you to have a retirement life and never have to worry. Reverse mortgages are simply another form of vendor take-back mortgages, except that a reverse mortgage is designed to financially harm you when there's no need for it to happen.
Can you explain the difference between the vendor take-back and the reverse?
Well, the vendor take-back is like one of the pieces of research that we've got going on right now, Jim, is we're trying to look at long-term, over the next 10 to 15, 20 years, how people are going to own their homes. Right now, you go to bank and get a mortgage, okay? The reason why, from 1982 till today, people go to the bank to get a mortgage is because the interest rates have been falling. In other words, it didn't make sense for someone to do a vendor take-back mortgage on their own house. In other words, I've lived in my house for 30 years. I have no mortgage on it. I am now 65 years old. I'm ready to move to a smaller house. There's a young couple who wants to buy my $1 million house. That young couple has a decision. They can go to the bank and get the mortgage, or I'll hold that mortgage for them. They will pay me a monthly income for the rest of my life on that mortgage. Every time the interest rate goes up, my income is going to increase. The person who purchased, that young couple, are going to rather buy it from me because I'm going to give them a little bit of a discount on the mortgage versus what they're going to get it at the bank. Where the bank may charge them 4%, I'm only going to charge them 3 3.75%. I win, they win, because there's no way I can make that money. The beautiful thing about a vendor take-back mortgage is you never do them, or you shouldn't anyways, with any risk. Because the only risk that there is that you foreclose on the property and you own your house again. And you sell it and get your cash anyways. if you have a good lawyer and financial accountant, or you've got a home ownership strategist, like one of our programs for the wealthy homeowner is specifically for this, you don't even have to worry about it. They'll do it for you. So what we're looking at, Jim, is we're trying to figure out when is the tipping point on bank mortgage financing going to take place. What I can tell you is today, in 2017, I know that this is a reality, and this is what's going to happen. I believe the preponderance of people buying single-family homes within the next 10 years are going to be buying them from people from current owners who accept the vendor take-back mortgage in trade. The financial benefits of this are just so overwhelming for everybody except the bank. It's going to be the public taking the power back from the banks. And the money, instead of going into the bank's profits, go into the public's pocket. It's a very exciting piece of research to do, because depending on how high interest rates rise and how quickly, the magnitude of the power of a vendor take back to not only empower the retiree, the former homeowner, but also now to give a financial incentive to a young couple to buy your house is just awesome.
The headlines have been dominated by Toronto's housing market the last few months, and it seems the rest of Canada is once again getting less attention. Is that fair that, once again, Ontario is the focus when it comes to real estate discussions?
Fair. I guess this is that Toronto-centric world that we live in.
Well, I noticed nobody nationally paid attention to the housing bubble in Vancouver, but when Toronto started to get one, all of a sudden Ottawa is talking about it.
Yeah, exactly.
It doesn't happen in Toronto. It doesn't exist.
Right. So let me tell you something that your listeners probably are not going to want to hear. This is the one time, really, truly, where you do not want Toronto to be in the news. It's when you do not want Ontario's housing market to be in the news. What has taken place over the last 4 years is a shifting of the national sales mix towards Toronto. The shift has been historical. When Vancouver's prices started to correct last year, Ontario and Toronto and the GTA took up all the slack. That's how much money was moving into the Ontario and the GTA housing market. When that cash flow stops is when we are probably going to hear desperation about a housing bubble popping. Now, we know when that pop is going to happen. We know when that capital is going to come out. We know the capital is already being withdrawn. Because we monitor all markets across Canada, we know how they're all interacting in the national selling price. Your listeners may have remembered over the last 2 years, the Canadian Real Estate Association trying to abate fears that housing prices were getting out of hand, often came up with a comment about if you remove Vancouver and Toronto from the sales, the average selling price in Canada is only $390,000. Well, what your real estate boards do not understand is that housing markets are provincial markets. And when you are trying to pull out Vancouver and Toronto from your sales numbers, and you're trying to uphold that as something that is okay, or that we're just going to blame it on Toronto, Vancouver, sooner or later, Toronto and Vancouver are going to get blamed for a lot more. Ontario is so important to the national average selling price, which means the calculation of Canadians' net wealth unless you're looking at the data the way that we are, you have no idea how extreme it is. Let me word it to you this way, Tim. If the housing mix shifts back, simply shifts back, in other words, house prices across the nation stay exactly the same as where they are today, but the sales mix shifts back to where it was in May of 2013, when this current cycle started, you can see a national house price drop of 21% without house prices dropping a nickel. A 20% house price reduction gives all those housing bears that have been out there, who've been pontificating about this for the last 7 or 8 years, a strong voice. The spiraling down effect is going to take place. Now, our voice is the only voice out there that's telling people, don't listen to all of these phony opinions on price. There is not a TSX out there for housing prices, folks. Organized real estate has used their numbers to con you for decades, and it's gotten worse since 2008. The con job has gotten way worse. Now, I will tell you, the General Joe Realtor or Susie Realtor, they are ignorant to this. They believe exactly what the public believes. They believe that these real estate prices are true. What I can tell you, folks, is it's all house price illusion. There's a reason why house price illusion happens, and there's a reason why house price drops through illusion happen as well. What has never taken place in this country's history was the run from May of 2013 until sometime soon. That run has never happened before. Of that length of a run of illusion has never happened. Usually illusion goes on for 12 months, goes away for 12 months, comes back for 12 months, goes away. It's never happened when there's been this long of a run. This is how you get a housing bubble. And everybody should be listening to what's going on in Ontario because it's going to impact the entire nation.
We also saw a news article saying housing prices remain high on the North Shore of Vancouver. Again, is this real estate propaganda or is this real?
It goes back to what I was saying earlier in the show, Jim, about 100 houses for sale. If you're buying the 40th house, the 40th best house of the 100 that are for sale, and you're paying $1 million, or you're the guy who bought the number one best house and paid $1 million, there is a massive difference in the quality of home that you get for that price. Let me give you a quick breakdown of this. Like this is how funny it is. We have a measurement which is called the main floor height index. And that's exactly what it means. What it means is single detached homes in Canada, the height inside of a house of the main floor has varied over the last 100 years. It's gone up, it's gone down, it's gone back up again. That metric is important because it tells you where the average house that is selling in a given month is located, how old it is for the sake of the argument. You do not see a brand new homes today being built without 9-foot high ceilings on the main levels of the home. Now, you will in lower priced homes, but on a modern regular average selling price detached home, your main floor ceilings are at about 9 feet. In the 1970s and 1980s, when the energy crunch was on, those ceilings in houses came down to 7 feet 6 inches. In the 1990s, when the new housing boom started, the housing market was in a collapse and the builders had to offer more value, ceilings then increased back up to, they're 7 feet 11 inches, but for the sake of the argument, we'll say they're back to a full 8-inch height. A full sheet of drywall was the height of your main floor living. Over the last 12 years, those ceilings have increased to 9 feet. So when we're talking about housing prices, it's as simple as knowing how tall the ceiling is on the main floor level of a single detached home to understand what the quality difference is. This is where these benchmark prices are such a joke. The benchmark prices actually increase. Now, I have a major issue with benchmark prices that I'm going to bring up in next week's show. So for all of your listeners out there, I'm going to break some big news here for you next week. I'm going to give this advice free, no strings attached next week. This is why the benchmark price is such a con job. The measurements in the main floor of the single detached home that the benchmark prices describe changes every single month because of the methodology they use for the benchmark. So when these comments about North Shore properties selling at these higher prices again, well, wait a second, folks. Put $100 million houses in a row, line them up, the best to the worst. If only 7 of those are selling, you're getting a way better deal than the person who used to be buying the 40th.
Ross, as the real estate market declines, are sales volumes likely to increase or decrease?
As the market declines, are sales volumes going to decrease or increase?
Yeah.
Okay, so sales volumes, the way we calculate sales volumes are dollars. So we calculate volume really as a volume. So sales volumes will decrease. Now, sales volumes can decrease, in other words, the total amount of money spent on real estate without prices dropping. Now that goes back to the sales mix, what I was telling you about over and over again in today's show. If you're buying the second best house in the street, or you're buying the 40th best house, obviously there's a massive difference in what those two houses are really worth, even though you're paying $1 million for both. The reason we track volume is that we can check against the sales mix to see how first-time buyers, trade-up buyers, ultra-luxury class buyers, family buyers, executive buyers, how they're all impacting the market. So when you use that compositional breakdown in consideration with the volume, you know where prices actually are. So we forecast people's prices on their houses. So we do not believe anybody out there should be purchasing a house in August of 2017 without someone sitting out there and showing them what the price of that property is going to be 4 months from now. Because odds are if you're buying it in August, you're not even going to close on it for 4 months. So it would be nice to know whether or not that house is going to be worth what you paid for it by the time it comes to close. We also can give them an 8 and a 12-month forecast. And we can also tell them if the market changes and we need to alter the forecast, because we only have to alter it if there is a total switch in the market. And then the new forecast is going to last as long as the market's going to run. They need to know those numbers. So we track the volume, when you're saying about volume, against the compositional mix. So volume doesn't necessarily, a decrease in volume doesn't necessarily mean you're going to see an immediate decline in prices. But I will tell you a sustained decrease of volume inevitably means house prices are dropping.
Ross, thank you so much for your help. And again, just reminding people, next week we'll blow the lid off benchmark prices.
You got it, Jim. And sorry for the technical analysis at the end there.
That's what we need, Ross. That's what people need, is some technical analysis instead of the stuff that you shovel out of a transport truck when you've been hauling steers.
Have a great weekend, Jim.
You too. My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Find us on Twitter at TalkDigitalNet. On YouTube, we're TalkDigitalNet. Questions for the show or our guests like Ross Kay can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.